We detected an unusual trade on NIO Stock, ticker symbol NIO, that seems to suggest that the stock could crash down. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is trading NIO. Because keep in mind, this investor could have a long position going bullish on NIO with underlying stock shares, and these put options could just be a hedge to protect their shares. And so without further ado, let's dive into the analysis of unusual option activity. As we can see here on the options time and sales tape, 10,000 contracts were being traded at 12:02 p.m. for the January 15 options for 2027. These are leap options that expire 2 years later. So keep that in mind. And this was at the 2 strike puts, paying $44 each. We need to multiply the options price by 100 since each option represents 100 shares of stock. And so $44 times 10,000 contracts is $440,000. But as we mentioned earlier, this could be just a hedge on underlying stock shares. So it is higher risk in comparison to the trades that we share on our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
If you want lower risk, higher probability of profit trades, then we'll put a link to our website at the top here where you can gain access to better trade ideas than this one here. Because not all of these unusual trades will be profitable. Even this one might be a loss. But as long as we diversify with higher quality stock picks based on this type of data analysis, then we can become more profitable in the long term. Now, having said that, we still traded this because it is still unusual, because by buying put options, it does cost money and reduce the potential profit on those stock shares if this investor had underlying stock. And so you can see our position here. POS stands for position. Green means buy at the 2 strike puts for these January 15, 2027 options. And we can see that the volume of 10,000 is much greater than the open interest of 2,300. And so we know that these put options are new opening trades and not closing trades. And so when we analyze this trade where they were buying these for $44 each, we can see here on the risk profile profit loss graph where the x-axis represents the share price of NIO, which is currently trading over here, and the y-axis represents profit loss. Note the zero break-even line here. And so when the lines are above that zero, it becomes a more positive gain. And if the stock goes up, it becomes a negative loss because this is a bearish trade. And we can confirm it here on the Greeks. We have a negative delta trade. If it was a long bullish trade, it would be a positive delta trade. Now, because these leap options expire 2 years away, the theta decay is very minor, nearly at 0 here. And so not much risk on the time decay. And we can see that even though these are 2 strike puts, that does not necessarily mean we have to trade down to $2 a share for these put options to be profitable. You can see that the purple line starts to become profitable right away if the stock starts to go down. The blue line represents the expiration date, 2 years away. And that is why the break even shifts all the way to the blue line as time goes on, because after 2 years, it does decay down lower. And that is why at expiration, the stock has to trade below $1.57 for these put options to be profitable. And so the chance of that happening is very low. And that is why these put options are very out the money. So this is a very high risk trade in comparison to the trades that we share on our website. If you want access to better trade ideas with a higher chance of profit and lower risk, we'll put a link to our website at the top here. Comment below, do you think NIO stock will crash down lower within these 2 years? Or do you think this was just a hedge? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.